Buying a home in 2026 could make you poorer unless you understand one number that almost nobody talks about. I know that sounds extreme, but it's exactly the conversation I have with my clients every week. And before I was in real estate, I was in the exact same position that you are. Sitting at my table trying to figure out whether buying was actually smart or just expected. If you're weighing rent versus buy right now, this video is for you. To my renters in Vancouver right now, I bet everyone is telling you that you're throwing your money away. Honestly, they're wrong. For a lot of you, renting is actually the smarter investment today. Between the market standoff and rents finally softening and having cash flow and flexibility to move and without needing to qualify for a mortgage is a huge advantage. But here's the question that you need to ask. Which path loses you the most money? In real estate, we call this sunk costs. See, when you rent, 100% of that payment is a sunk cost. It's gone. When you buy, your payment is higher, but only the part that is actually the sunk cost, which is interest, taxes, strata. The rest basically is forced savings account. I'm Javita Pinto, your favorite local real estate girly, and we're about to get into one of the most controversial topics, rent versus buy. If you've been wondering, what does it cost to rent this place versus what does it cost to own it? How much of a down payment do I need? When the dust settles, what is the true cost of ownership? I'm going to answer these questions and give you maybe a different perspective on rent versus buy, the breakdown using two very similar properties. Well, yes, I make a living to help clients buy and sell real estate. I'm not here to convince you to do anything. Information is power, and this video is valuable. I work with a lot of first-time homebuyers here in Vancouver. Most are renting or living with a family and trying to figure out what their next step should be and whether buying actually makes sense right now. Today, I'm simply breaking down this information without the hype, without the fear, without the agent spin. Stay until the end because I'm revealing the one opportunity cost that most buyers are completely ignoring and showing you the leverage advantage. Let's jump into it and discuss a lovely entry-level one-bedroom in downtown Vancouver. According to Liv.rent, February 2026 report, downtown Vancouver rentals are actually softened. Unfurnished one bedrooms averaging around $2,457. That's 9% down from last year. To put this into perspective, Vancouver is one of the most desirable places to live in the world. And downtown Vancouver is not only beautiful, but also very accessible. So in our scenario, if you're paying $2,457 per month to your landlord to rent, on an annual basis, you're paying $29,484. Here's why renting can actually make sense right now. First, flexibility. Homes in Vancouver are taking around 100 days to sell. That's over 3 months. If you're renting, you can move in 30 days. New job, relationship change, business opportunity. You're not locked into a property that you need to sell first. That flexibility has value, especially in a slower market. Second, responsibility. When you rent, the most amount of responsibility stays with the landlord. Renting limits your exposure. Maintenance issues, repairs, unexpected surprises are inconvenient, and they're not your issues or financial burden to resolve. Third, your down payment doesn't just sit there doing nothing. Let's say that you saved $100,000. If you don't buy, that money stays in your account. At around 4.45%, that's roughly $4,450 a year, or about $370 a month coming back to you. So if you rent, If your rent is $2,457 and your savings are generating you around $370, your effective cost isn't $2,457 anymore. It's closer to $2,100. That breathing room matters, especially if you're building a business, investing elsewhere, or just want liquidity while the market settles. Liquidity is power in uncertain markets. Hey friends, quick pause. If you're enjoying today's video, all I ask is that you like it and subscribe to my channel. I would be so grateful if you did that. If you're already subscribed, thank you so much. I'm so happy that you're here. Renting is a great option for a lot of people. Now let's look at the buying side. You gain stability and control. So no unexpected move because your landlord is selling. No sudden rent increases. Those are huge. Freedom to make the home your own. You can paint your walls. You can renovate the kitchen. You can get a dog. You can change the flooring. When you own, you don't need permission. You get to decide. Okay, you know this third one is coming. You build equity. Instead of money disappearing into rent or everyday spending, a portion of each payment gets back to you, building long-term wealth over time. Let me show you what I mean. The most recent Greater Vancouver REALTORS data for January 2026 lists the condo benchmark at $704,600. With the current insured 5-year fixed term rate at 3.84%, your total monthly outflow is roughly $3,700. Based on a 5% minimum down payment, an interest rate of 3.84% and a 25-year amortization, your total monthly mortgage is $3,688. Here is how that total number is calculated. The loan amount, purchase price is $704,600, down payment, 5% of the first $500,000 and 10% of the remainder is $45,460. The base mortgage is $659,140. The CMHC insurance premium is $26,366, and the total loan amount is $685,506. The total monthly payment is $3,688. This is the headline number that appears on your bank statement every month. It includes interest, which is $2,194. It includes your principal, which is $1,494, and the total, $3,688. As you can see, I've added the numbers should a buyer want to purchase a home with a 20% down payment. You can see that the numbers are vastly different. Now, because this is meant to be without any bias, the minimum down payment is what I think we should continue using for this scenario. So for home ownership costs, assume strata fees are around $450 per month, which is slightly on the higher side, plus about $165 per month in property taxes. I'm intentionally using conservative numbers here because this isn't about convincing you to buy. It's about giving you a realistic picture. When you buy a home, there is also upfront closing costs that come with it. A potential appraisal for your mortgage. For first-time homebuyers, at this price point, land transfer tax can actually be fully exempt. Plus, roughly $1,500 for legal fees. Those are one-time costs, and they matter and should be a part of a plan. Now, things like internet, hydro, and most day-to-day expenses don't really change whether you are buying or you own a property. Many renters already pay utilities and internet costs, and they're about the same anyway. Insurance may differ slightly, but it doesn't disappear entirely. Renters carry tenant insurance, and owners carry homeowners insurance. The price varies a bit, but not enough to fundamentally change the math. When you compare renting versus buying, The real difference comes down to housing costs, not the everyday expenses, as those costs are largely a wash. If you tune out everything else, the key point, the total payment looks high, but the portion that's truly gone each month is much closer to rent than most people think. For a typical condo, your gone forever costs with a minimum down payment, the interest, the strata, and the taxes total roughly $2,809. So here is the real bottom line. Most people look at the total mortgage payment and see a massive gap. But as you saw, the sunk cost of owning that Vancouver apartment, including the interest, the strata, and the taxes, is $2,809. Compare that with $2,457 you're handing to your landlord every month. That means for a difference of $352, you aren't just getting a roof over your head. You are triggering a forced savings plan of $1,500 a month in equity. With each mortgage payment you make, it increases your ownership in the property. It forces you to save money, and you are essentially paying $352 a premium to get $1,500 back. Buying is more of a long-term play, and understanding it's about strategic wealth transfer. I promised a fair look, right? So let's continue. In 2026, buying right now only makes sense if you're playing the long-term game. If you try to treat real estate like a short-term trade, the math will punish you. Sell within 2 years, and BC's home flipping tax can take a big chunk of your profits. Add transaction costs, and on top of that, short ownership periods rarely work financially. But first-time homebuyers do get a meaningful advantage. The province increased the property transfer tax exemption, so on a condo around that $700,000 price point, you may save about $8,000 upfront. Real money that reduces your closing costs immediately. Here is the one thing that no one tells you: leverage. Right now, the sales to active ratio is at 9.1%. Historically, anything under that 12% is a buyer's market. At 9.1%, we are in a state of buyer's dominance. While the crowd is waiting for the bottom, the smartest individuals are negotiating prices below assessed values because they know that they have leverage to walk away. Okay, so here's my final take. Renting is a temporary solution for mobility. Ownership is a legacy move for stability. Even in a quiet market, the wealthiest people I know don't try to time the bottom. They buy good assets and wait and hold. If you want to run these numbers for your specific situation, for a home that you're looking at, scan the QR code and book a call with me. I'm Javita Pinto. Follow for the data, not the headlines. See you on the next one.